2024 is going to be a tough year for the job market. Take a look. Companies have been offering less frequent raises, and when they do offer a raise, they're not as big as they were before. Companies are also cutting starting salaries for new hires, and companies are also expecting more productivity out of each current employee. But that's not all. What I think you'll find even more interesting is number one, how we got here, and then number two, what's going to be coming more in 2024. And this all really starts back to what we saw happen in 2020. Now, we saw different things happen before 2020, but the big changes started to happen in 2020 with the pandemic, because that was when we saw the money printer get unleashed by the Federal Reserve Bank and the government. Now, there was a lot of money out there. Some of this money went to consumers with stimulus checks and unemployment checks. Some of this money went to businesses with bailouts and PPP loans and other types of things. But what happened was, now there was a lot of money floating out there, and companies started to see record sales, and they were making a lot of money. So this led to a boom in our economy in 2021, where not only was the economy booming, but now companies started hiring employees like crazy. Now, when you have the economy growing so quickly, every single company wants to expand because number one, people have money to spend. Number two, companies are getting money from the government. And number three, interest rates are dirt cheap. So every company is trying to grow as fast as possible. So now when every company is trying to grow as fast as possible, what happens? You're starting to see hiring grow. That's why we saw this hiring boom in 2021. And now when everybody is being offered a job, that's when we saw this shift in the workforce, and companies have to fight to get the strong employees. And so that what led to the 2022 wage boom, where incomes are rising at some of the fastest rates we've ever seen in America, because now companies are fighting for the employees. Now, all of this sounds good, right? Yeah, except there's one little problem here. Because in 2022, that was when this free money began to stop. In 2022, that was when the Federal Reserve Bank started raising interest rates. We started to see the end of all these pandemic stimulus programs. So now the money starts to go away, interest rates start to go up, borrowing becomes a little bit more difficult, and now money becomes a little bit more expensive, and that's when some companies realized, oh no, we grew a little bit too big, a little bit too fast. So that's what led to many companies downsizing their staffs in 2023. So now the question is, here we are in 2024, and what's going to be coming next? We know that the Federal Reserve Bank has come out and said that they expect wage growth to slow down, they expect the economy to cool down, and they expect unemployment to rise to around 4.1% in 2024. However, it doesn't look like this trend of employers downsizing the companies, right-sizing the companies, and expecting more productivity is going to be ending anytime soon. In fact, it looks like this is going to be accelerating in 2024 because employers are only going to want the right employees rather than all these employees, because companies are now becoming much more productive and they need to become more lean to be able to compete in this next stage in our economy. Take a look at what Citigroup just did. In the end of December 2023, they told hundreds of thousands of employees to spend the last couple of weeks of December working from home. Now, the reason why they told you to work from home wasn't so you could enjoy the holidays with your family. It's so the management can decide if they want to keep your job in 2024. See, the reason why 2024 is so interesting is because this is going to be the culmination year now of the impacts of the previous year's high inflation. We saw really high inflation in 2021. We saw really high inflation in 2022. We saw high inflation in 2023. Now we're going to feel the impacts of that inflation in 2024 and the impacts of the interest rate hikes in 2022 and 2023, because while the Federal Reserve Bank says they want to start cutting interest rates in 2024, we're still going to be seeing high interest rates. So now if 2024 is going to be the culmination year of now these high interest rates, the high inflation, and corporations are going to start seeing the impacts of their corporate debts readjusting, because 2024 is the beginning of all this mountain of corporate debt readjusting. They'll be adjusting even more in 2025. That means you can expect more corporate reorganizations in 2024. And there are three things that I want you to understand. So let me clean off the whiteboard and write down the three things. The three things you want to understand are, number one, the economic shifts that we're seeing right now. Number two is the employer shifts that we're seeing in the job market right now. And number three is, what does all this mean for you? Now, let me start by talking about what's going on with the economic shifts. And just so you know, if you do want to stay up to date on what is happening in the economy, when it's happening, my team at Briefs Media has a free newsletter called Market Briefs, where every day my team is working to break down what's happening in things like the economy, the housing market, the stock market, the global economy, and the crypto market into a fun, witty, and easy to read email. It's completely free. You can read it in less than 5 minutes every morning, and I promise you that you're going to love it. And if you don't love it, well, you can unsubscribe anytime because it's completely free. So if you want to join Market Briefs, I got the link to how you can join down in the description below, or you can go to briefs.co/market. Now, I started hinting on these economic shifts a little bit earlier, but we really started to see the shift in our economy back in 2022, because in March of 2022, that was when the Federal Reserve Bank begun raising interest rates. And since then, the Federal Reserve Bank has raised interest rates 11 times. Now, the reason why the Federal Reserve Bank has been raising interest rates so aggressively was to cool down the inflation problem that we've been facing. Now, why did we have this inflation problem to begin with? This goes back to the money printing and the stimulus and the government spending that we saw happen in 2020, 2021, and into the early parts of 2022. See, when you start spending money and create all this money, everybody has money to spend, businesses have money to spend, everything just starts getting injected into the economy, everybody's buying things, businesses are expanding. Well, now naturally the price of things are going to rise, because when you have so much demand for a limited supply of goods, the price of these goods are going to rise. That's supply and demand, economics 101. So we had all this money get injected into the economy. People got money, businesses got money, everybody starts spending. You don't have enough goods, you don't have enough supply, and this then caused the prices of things to rise. So now to fight this inflation, that was when the Federal Reserve Bank said, we're going to make money more expensive. We're going to raise interest rates. Now, these higher interest rates have impacts, and we haven't really seen the full impacts of the interest rate hikes that we've seen. A lot of economists say that it takes somewhere between 12 to 18 months to really feel the impact of an interest rate hike. So now, interest rates go up, and now what happens? Buying a home becomes more expensive. Buying a car becomes more expensive. Your credit card debt becomes more expensive. If you're a business and you want to go out and borrow more money, that becomes more expensive. And if you are a business and you're sitting on debt, well, now that debt is going to readjust, because corporate debt is not a 30-year fixed rate mortgage. Many times it's a 5-year term. That means that you could go out and borrow millions and millions of dollars at 3%, and then a few years later, that debt is going to readjust. And now if interest rates are much higher, that means your interest payments are also going to grow, not because your debt balance is necessarily bigger, but because the interest rate to service that debt is higher. And 2024 is when we're starting to see this big wave of corporate debt readjust. 2025 is an even bigger wave of corporate debt readjustments. And that's why you have a lot of corporations sitting on the edge of their seats wondering where interest rates are going to go. Because if interest rates stay high, that means their interest payments are going to skyrocket. Because in 2020, 2021, we started to see this massive flood of corporations either readjusting their debt or going out and taking on a lot of debt because interest rates are so cheap. And now here we are today with interest rates much higher than where they were before. And this is one of the reasons why the Federal Reserve Bank was saying that they want to see unemployment rise. The reason why they want to see unemployment rise is because that can also help cool down inflation. Now, this might seem kind of like a weird thing to say. Why would you want Americans to lose their jobs? But if you think of it from an inflationary perspective, what the Federal Reserve Bank is saying is, if you don't have an income, you can't go and shop. And if you can't go to the store to shop, there's no demand for those products. And if there's no demand for those products, that can force companies to then lower the prices of their products. So this is where now the Federal Reserve Bank is predicting unemployment to rise in 2024. And if that continues to happen, that means more and more Americans are going to lose their jobs. So you can start to see the changes that we're expecting to see in the economy in 2024, because number one, we're going to be seeing the impacts now of the higher interest rates. We're going to see the impacts of this cumulated inflation, and we're expecting now that because of these two things that our economy is going to be cooling down. So now if we shift gears and take a look at how employers have been shifting, what are the changes that we're seeing happen in 2024? Well, now corporations are having to deal with the impacts of the higher costs. They're worried about slowing sales, and that's why they need higher productivity. I'll call it prod right there. So now employers are seeing the impacts of the higher costs. Why are we seeing the higher costs? Number one, because of all this inflation. Corporations' costs have gone up. Number two, labor costs have also gone up. They have to pay more money for their employees, not to mention that a lot of corporations have kind of bloated their staff over the last couple of years. So a lot of corporations have a lot of staff, and many of these salaries have risen pretty quickly in the last few years. So now corporations have these higher costs. And at the same time, corporations are worried about these slower sales. Why are they worried about these slower sales? Because a lot of consumers, a lot of Americans are kind of getting tapped out. We saw credit card debt reach new record highs in 2023. We saw household debt reach new record highs in 2023. Student loan payments restarted in 2023. So a lot of Americans now are also feeling the impacts of the high inflation and the higher cost of living, and a lot of Americans will eventually run out of the ability to continue spending at the same rates as they were before. And if that happens, that means businesses have less ability to sell stuff because people just can't keep buying stuff. And if they can't keep buying stuff, well, then that can hurt sales. And that's why you're going to see more and more companies push for this higher productivity, especially in 2024. That's one of the reasons why you're seeing more and more companies push for this return to office, especially in 2024, because they need more productivity out of each employee. They need more revenue out of each employee to justify that position, to justify that division, to justify that growth. And naturally, in addition to that, companies want to be prepared just in case we hit a recession. Now, this isn't the first time that we've seen this push for productivity really increasing in companies. The big shift and start of this happened back in 2022. I think the prime example of this was Google, because they were so public about this, because Google came out and they had this public notice essentially saying that they are going to need 20% more productivity out of every single one of their employees. And if you cannot become 20% more productive, then there's a chance that your position, your job will no longer be there at the company. That shift at Google started in 2022 when interest rates started to rise. And then this company productivity shift really accelerated in 2023. And it looks like it's going to be continuing potentially even faster in 2024. The most recent public example of this was the one I discussed earlier, Operation Bora Bora, which was inside of Citigroup to restructure and reorganize Citigroup to be a much more effective and productive organization. Citigroup has about 240,000 employees on their payroll, and then they told more than half of those 240,000 employees to work from home during the end of December. That way their management can decide if they want to keep a position, how productive you are, and how much productivity do they want out of the employees that they're going to decide to keep. We started to see this shift in 2022. It accelerated in 2023, and that's why we saw a lot more layoffs in 2023 than we saw in 2022. And if interest rates stay high in 2024, you can expect this shift to accelerate into 2024, which brings us to the question, what does this mean for you? What's going to be happening in 2024? Well, if these trends continue, if we continue to see the impacts of the inflation and the higher interest rates, if we see the impacts of a slowdown in spending at some point in 2024, you can expect that is going to impact businesses. What are they going to do? Well, they're already starting to be more productive. That could accelerate their path to want to push for this productivity, which could accelerate their path to potentially downsize or right-size their company, which means companies are going to want the strongest and the best team players possible. In 2021 and 2022, as we saw this economic boom and this wage growth, a lot of people were able to get positions where they didn't necessarily have to, let's say, work too hard, where they could kind of just slide under the radar, because when a company is growing very quickly, you tend to see more fat and more just kind of unorganizedness in companies. Well, now, as we're starting to see a change in the economy, where you're starting to see the economic system start to slow down a little bit, companies are not going to have that same luxury to do that. Because in 2021 and 2022, you saw the Great Resignation, you saw the quiet quitting, you saw all these things happen where employees were able to kind of have a lot more power and have a lot more leverage and have a lot more kind of flexibility to get things the way that they wanted. Well, now that shift is going to be changing more into the hands of the employer as the economy slows down, because you are going to see more and more employers demand productiveness. We're going to see more and more employers demand efficiency, and you're going to see more and more employers demand results. And so that means if you're a hard worker, if you're a go-getter, if you're that type of person who's willing to put in the 110%, you're going to have the ability to get a lot more job prospects, a lot more raises, and a lot more that ability to see growth in your career than somebody who just kind of wants to cruise and just get through the system. That's going to be the shift that we're seeing, because now as you start to see a slowdown in the economy, that's when businesses have to really weed out the not so good employees. But if you're one of the people that's willing to be dedicated and put in the work, you have a much stronger ability to continue seeing your position and to see more growth in your position, while you'll see the other stuff start to get more weeded out, especially in 2024. Why the Treasury Secretary is saying that Americans have more money today than really ever before. Let's dive in. According to the Treasury Secretary's report, in 2023, the median American worker can afford the same goods and services they did in 2019 and still have an extra $1,000 left